We'd like to call the meeting to order. We want to thank our witnesses for coming forward. This is pursuant to Standing Order 1082. It's a continuation of a study on the structure of Canada's federal revenue raising system. And we have with us the financial executives of International Canada. We have Barry Gorman is the chair, and as well Michelle Conway, who is the chief executive of national president. We want to thank you, and we're going to yield you the floor. But before we do that, and I'll introduce the others. Well, we actually have Neil Brooks is here, actually from York University, and we have from the OECD by video conference, Christopher Heedy. Eddie, Christopher, can you hear us?
Yes, I can hear you.
Okay. We just wanted to make sure that the video connection is right, and you can hear us, we can see you and hear you, so everything is set to go. And with that, we want to welcome you again to the committee, and we'll yield the floor to Mr. Conway first. We're very interested in what you have to present to the committee, and the floor is yours, sir.
Thank you, and good afternoon, Mr. Chairman and committee members. My name is Michael Conway, and I'm pleased to present on behalf of Financial Executives International Canada our views on your study of the structure of Canada's federal revenue-raising system. FEI Canada is a voluntary professional membership association comprised of more than 2,100 of Canada's senior-most financial executives, organized into 11 chapters across the country. The recommendations presented to you are the result of the collective effort of our tax committee, which is comprised of senior financial executives representing a broad cross-section of the Canadian economy and is chaired by Barry Gorman, who's with me today. Our submission focuses on three key components necessary for a sustainable economic environment: competitiveness, efficiency, and accountability of federal spending. Competitiveness is critical to the long-term prosperity of, and in certain cases, the very survival of Canadian business. Competitiveness implies production with the most efficient use of resources, notably capital and labor, consistent with the desired degree of product quality, access to capital required to invest in modern machinery and equipment, increased rates of productivity, and enhanced training and education. As demographics change, Canada faces a severe labor shortage. We must attract and retain the best and brightest talent with the know-how required to increase productivity and competitiveness. As such, we urge the government to implement mechanisms that support Canadian economic value creators, that encourage global development, and improve Canada's business climate. A supportive tax system is critical to enhancing Canadian economic competitiveness. With this in mind, we submit recommendations related to three topics: corporate taxes, human resources training and development, and free flow of capital. Let me begin with corporate taxes. We have three specific recommendations in this area. First, accelerate corporate income tax reductions. FEI Canada congratulates the government for introducing rate reductions, but it is worthy to note that Canada's effective tax rate is still too high. FEI Canada submits that Canadian corporate taxation must be internationally competitive to make domestic business more productive and to facilitate direct foreign investment. We need only to look to numerous foreign countries, such as Ireland, who have significantly reduced their corporate taxes since 1980 as a successful means of attracting increasingly mobile capital. Second, reduce the proliferation of non-neutral tax preferences. Some corporations claim various tax incentives as a means to reducing their statutory tax burden, resulting in significant effective tax rate differentials across industries. This disparity is heightened by the different provincial corporate tax rates and credits. Third, encourage provinces to normalize their corporate income tax rate structures and repeal remaining provincial capital taxes. Next, let's look at human resources training and development. FEI Canada urges the government to actively aid Canadian businesses in supporting the enhancement of employee skills and qualifications in two specific ways. First, by broadening deductible qualifying education and training expenses, and second, by introducing a refundable tax credit for qualified education and training. Business responds to incentives which benefit operations. An employee education and training credit will spur business to increase spending in this vitally necessary area. FEI Canada further recommends that the government establish a centre for continuing workplace education and training to stimulate development of world-class champions of continuing education, further details of which are included in our brief. This kind of program would be particularly beneficial to small and medium-sized enterprises. Our final recommendation in the competitiveness category is the need for the free flow of capital. We urge the government to continue reducing dividend withholding taxes for non-residents at a minimum to their 5% and 15% model found in most new treaty negotiations. This reduction would result in minimal revenue losses, as it primarily relates to emerging economies such as India and China that still have higher withholding rates. On the other hand, complete elimination of withholding taxes would provide Canadian businesses better access to global capital markets at the lowest possible cost. Thus, we would like to expand our submission by suggesting government study the feasibility of eliminating all withholding taxes. I'd now like to move to our second category of recommendations: efficiency. A tax measure is efficient when it achieves its goals in a cost-efficient manner. It is FEI Canada's position that several aspects of the Canadian tax system do not support efficiency, do not blend with overall fiscal policy, and do not minimize interference with system equity. Canada's tax system is overly complex patchwork, quilt, of overlapping tax measures, regulations, and administrative practices. Consequently, compliance costs are excessive. Non-resident investors have noted that Canada has a bewildering proliferation of tax rules and multiple tax jurisdictions. Taxpayers need more stability and consistency in the tax policy-making process and in the administration of tax rules. To facilitate a transition to a more streamlined tax system, FEI Canada would like to highlight two recommendations. First, we recommend the government work with the provinces to adopt a national harmonized sales tax. Many Canadian corporations transact business in multiple provinces, and there are variances in both sales tax rates and between the GST and the PST tax bases. Sales tax registrants must submit sales tax returns to multiple taxing authorities and dedicate resources to multiple tax reviews, queries, and audits. In harmonized provinces, businesses receive the provincial portion of the HST paid on purchases, which is currently 8%. In non-harmonized provinces, businesses are only refunded the GST they pay and not the PST they pay on their purchases. By moving to a harmonized sales tax, businesses in the now non-harmonized provinces would be refunded all sales taxes they pay. Greater harmonization of provincial sales taxes with the GST would enhance competition and reduce compliance costs, as taxpayers and the government would only have to deal with one tax authority. A harmonized sales tax makes for an efficient tax system. Harmonization in the Atlantic provinces appears not to have led to a decline in provincial tax revenues, nor to an increase in consumer prices. FEI Canada is advocating that GST should not be reduced below its current level. If these consumption taxes were cut further, alternative forms of revenue would have to be found, and spending would have to be reduced to cover the shortfall. Our second efficiency recommendation is to call upon the government to implement either group tax consolidation or a revenue or a loss transfer system. Canada is the only G7 country which does not permit group tax reporting, either in the form of tax consolidation or loss transfer. Our research reveals that some corporations devote more than 1,000 person-hours, or over $500,000 annually, in specialist costs, devising complicated tax strategies to effectively achieve the same end result as group reporting. Implementation of this proposal will reduce the compliant costs of corporate groups, and this will be especially beneficial to small and medium-sized enterprises, as they can less afford elaborate tax planning. Our third and final category of recommendations is accountability of federal spending. Spending by the federal government certainly affects the revenue system, since the government must raise revenues required to pay for its program expenses and national debt charges. While we commend the government on some recent spending restraint initiatives, we note that the 2006-2007 program spending has increased back to its 97-98 level of 13% of GDP, and the 06-07 budgetary expenses are at their highest level ever. These trends are not conducive to responsible management of federal fiscal resources. Aggressive debt reduction will result in lower interest charges in future years, resulting in more resources available for either tax reductions or necessary increases in program spending. Consider one thing. 1/3 of our current program expenditures are for old age security and health care, two areas we know will continue to cost more as our population ages. To meet these growing obligations, we urge spending restraint and the maintenance of the current debt reduction structure. We encourage the government to reallocate funds in areas which lead to economic growth, notably for infrastructure funding to research and development, transportation, and post-secondary education. Finally, FEI Canada encourages the government to implement a regular review of the Tax Act, which is needed to keep with the principle of transparency and provides the opportunity to modernize Canada's tax legislation at regular intervals so as to support and preserve Canada's competitiveness domestically and internationally. Ladies and gentlemen, FEI Canada thanks you for your time and for the opportunity to present our ideas to you. Dr. Gorman and I would be pleased to answer your questions, any questions you might have.
And thank you very much. And before we get to the question and answer, we'll let the other two presenters go, and then we'll start our round of questioning. So we'll now hear from York University. We have Neil Brooks, Director of the Graduate Program in Taxation, Osgoode Hall Law School. Thank you for coming, and we look forward to what you have to tell the committee.
Thank you very much, and it's a great pleasure to be here, and I thank the committee for inviting me, and I wish you good luck in the important task you've undertaken of examining the federal tax system. Let me begin by talking just very briefly about the purposes of the tax system. The tax system is, of course, simply a policy instrument that the government has at its disposal in achieving its broad social and economic objectives, and therefore in any kind of review of the tax system, it seems to me to make sense to begin by thinking about what purposes the tax system can and should serve. And so my comments are going to be kind of general. I'm quite prepared to make some specific comments, but these comments will be kind of general. It's commonly said that the tax system has three purposes: to raise revenue for government expenditures, to assist in mitigating the unequal distribution of wealth and income in society, and thirdly, it can be used to attempt to influence choices that individuals make in their private, social and economic choices that individuals make in their private activities. And I suppose the broad point that I would try to impress upon the committee is that the tax system should be better designed to serve the first two purposes, namely raising revenue and assisting in achieving a more equitable distribution of income, and the tax system should be used very sparingly. Certainly more sparingly than it has been for the third purpose, namely trying to engage in various forms of social or economic engineering. The most important purpose of the tax system is, of course, to raise revenue to finance government expenditures, and in modern societies, governments have many important and irreplaceable functions to perform. Therefore, it's absolutely vital that the government have a tax system that's capable of raising a good deal of revenue in ways that are equitable and efficient. And I might just make three subsidiary points about that. One is that I might note by international standards, as I'm sure you're all aware, Canada is and always has been a relatively low-tax country. For example, in 2005, the last year for which we've got comparable statistics, taxes in the average OECD country was about 36.2% of GDP. In Canada, taxes were only 33.4% of GDP, almost 3 percentage points less than the average industrialized country, and about 5 percentage points less than the average European country. Total taxes collected in Canada have always been substantially below the international average calculated as a percentage of GDP. That is, we've always been a relatively low-tax country, and therefore it seems to me, just incidentally, if someone were looking for a cause for any malaise in Canada's economy or society, there's certainly no international evidence to support a claim that it might be blamed on high taxes. Also, I might note that if you look across countries with high and low taxes, what you discover is that those countries with high taxes tend to have much better social outcomes than those countries with low taxes. That is, much better quality of lives for their typical citizen. Just by way of illustration, in the United States, for example, which is a relatively low-tax country, 22% of children live in families below the poverty line, whereas in the Nordic countries, which have relatively high taxes, the percentage of children living below the poverty line is 3 or 4%. Trivial. Canada, of course, which is a relatively low-tax country, at least closer to the average in the U.S., about 13% of children live in families below the poverty line. That is, there's a very close correlation between, in effect, children living in poverty and the amount of taxes collected in a country. That is to say, one thing that our taxes buy, or that higher taxes buy, is lower levels of poverty. But in fact, the same could be said about almost any social indicator. It's hard to think of a social indicator, whether it relates to environmental sustainability, gender equity, equitable distribution of income, in which there's not a fairly strong correlation between taxes and better social outcomes. And indeed, those countries with high taxes that achieve this relatively good social outcomes, in fact, are countries that are at the same time achieving relatively high levels of economic growth and the material well-beings for their citizens. That is to say, when you look around the world at the international evidence, there appears to be no trade-off between having an equitable society and having high rates of economic growth. Generally, the international evidence is that those policies that are financed with higher taxes not only contribute to better social outcomes and a more flourishing democracy, but they also appear to contribute to a highly educated, healthy, and productive workforce. A second subsidiary point about this purpose of the tax system is that means that in order to raise a sufficient amount of revenue to finance functions of modern governments, it's important that the government be able to rely upon a broad mix of taxes. Consumption taxes, income taxes, wage taxes, corporate taxes, all of those are important sources of revenue, and each tax should be designed so that it's collecting revenue in the most equitable and efficient manner possible. Thirdly, I would just make the obvious point that the recent tax measures would seem to needlessly impair the revenue-raising abilities of the Canadian tax system. For example, the cuts to the GST, which took about $13 billion out of the federal tax system, the introduction of just a plethora of additional income tax loopholes, including tax prepaid savings plans, which in future years are going to cost the government billions in lost revenue. Indeed, if you look for this last fiscal year, all of the taxes collected by the federal government were made up about 13.7% of GDP, which was lower than the level of taxes collected by the federal government as a percent of GDP back in 1960, in spite of the many additional needs that our society would appear to have. So that's my first point, that the most important objective of the tax system is to raise revenue, and that the committee ought to be examining the system to ensure that it's capable and will, in the future, of achieving relatively high levels of revenue. Secondly, in addition to raising revenue, most people agree that the tax system is a useful policy instrument for achieving a more socially and morally appropriate distribution of income than that which results solely from market forces. And two things suggest that this committee, in reviewing the Canadian tax system, should in particular be concerned about this important function of the tax system. First, income in this country is becoming much more unequally distributed. Every measure of the distribution of income and wealth shows that the real income of the typical family has essentially stagnated over the last 3 decades, while the rich have been getting much richer. Just by way of example, in 1980, the top 1% of income earners received about 7.5% of national income. By 2000, they were receiving 13.5%. The increasing concentration of income and wealth is staggering, and it will have a severe social and economic consequences for the country. It will threaten eventually our economic prosperity, erode social cohesion, increase economic insecurity, reduce public health, distort the allocation of resources and talents, lead to the withdrawal of the haves from public life, erode democratic values, and ultimately will diminish the flourishing and richness of Canadian society. And at the same time that the distribution of income has become more unequal, the effective tax rates paid by high-income individuals has been going down. Again, let me just cite one figure. In 1990, the top 1% of Canadians paid a much larger percentage of their income than the bottom 10%, considering all taxes. But by 2005, the top 1% was paying less in taxes as a percentage of their income than the bottom 10%. That, it seems to me, is just shocking, and I would urge this committee in their deliberation to consider ways to make the tax system more progressive. Finally, The income tax now contains a bewildering variety of implicit spending programs, measures by which the government tries to influence the social and economic choices that individuals make. Indeed, there's over 150 of them in the income tax alone by any reasonable count. And of course, over the past 2 years, the government has added greatly to that number. The registered educational savings plans have been enriched, exempted scholarships and bursaries, provided a tax credit for public transportation. The children fitness tax credit eliminated the capital gains on publicly traded shares donated to private foundations. Those measures, and as I say, there's over 150 in the Income Tax Act, have absolutely nothing to do with the tax system. They're spending measures, even though the government keeps calling them tax cuts. They're not tax cuts. They're spending measures. And for example, with respect to the tax credit for fees paid for children's fitness program, what the government is essentially saying is, for families that, let's say, spend $500 for fees for sending their kid to hockey school, what we will do is we will pick up 1/4 of the cost. So you send us your receipts for $500 for sending your children to a fitness school, and we'll write you a check for $125. It's a spending program. But instead of writing the check, what the government says is, well, instead of us writing you a check, just offset against your tax liability. And that's what people do. But it has nothing to do with the tax system, other than the fact it's being offset against their tax liability as a way of delivering the subsidy. But that doesn't make it a tax measure. It's a spending measure that happens to be delivered in the tax system by allowing it to be offset against people's tax liability. Most of those implicit spending programs in the tax system, to the extent that they serve any legitimate government function, are inequitable, they lead to inefficiencies, they lead to abuses. They're not transparent. The government has no control over the spending. They complicate the tax system. They make it unfair. The real pathway to efficient and equitable tax reform would be for this committee to review all of those tax expenditures in the Act, repeal those that serve no useful government function, or the ones that are so badly designed that they're just a waste of government money, and then the ones that remain, the ones that you want to keep, if you still want to keep those spending programs and matching people's receipts or spending, take all those programs and take them out of the tax system, put them in a separate act, and in effect say to individuals, if you qualify for one of these spending programs, you get, if you want to continue to deliver them in this way, you can offset the amount that you qualify for against your tax liability. Put them in a separate act and embed them in the budgetary process like every other government spending program, so that Canadians can see their true cost and Canadians can see who are benefiting from them. I think if you did that, indeed, most Canadians would be appalled at the cost of those programs and how much the benefits largely go to well-to-do families. Thank you.
I can see we're going to have an interesting debate when we get to question and answer. We'll now move on to Christopher Heddy. He's from the Organization of Economic Cooperation and Development. Christopher Heddy is the head of the Tax Policy Statistics Division of the Center of Tax Policy Administration. The floor is yours, sir.
Thank you, and thank you very much for inviting me to speak to you today. I'm going to talk about how the Canadian tax system compares to tax systems across the OECD. And in my presentation, I will refer to some of the charts that I believe have been provided to you. First of all, there is a chart that reports tax revenues as a percentage of GDP. And as Professor Brooks just indicated, this shows that in Canada, the tax revenue as a percentage of GDP is somewhat below the OECD average. And I should say that these are tax revenues for all levels of government, federal, provincial, and local taxes. If I move on to the tax mix, Canada is a country which, compared to most OECD countries, raises a rather high proportion of revenue from personal income tax, a rather small proportion of revenue from social security contributions, and a slightly lower than average, but not much, share from taxes on goods and services. But I think the main interest that you have is in the actual tax rates. And so I'll move on and talk about trends in the main or top corporate tax rate that there have been over the past 25 years or so. And what we can see is that there has been very dramatic reductions in corporate tax rates across the OECD over the last 25 years. And in fact, I must say that these cuts are continuing. For example, this chart shows as the latest figure the corporate tax rates for 2007. But at the beginning of 2008, Germany reduced its corporate tax rate from about 38 or 39% to just below 30%. So in fact, if we take that change into account, Canada now has the third highest corporate tax rate within the OECD. On the next page, there is a comparison of corporate tax rates in the form of a table. And the point that this table makes is that large-sized OECD countries seem to be able to sustain a higher corporate tax rate than small-sized OECD countries. And that not only do small-sized OECD countries have lower corporate tax rates, they've been cutting them faster. And we would regard Canada as a medium-sized OECD country. And you can see that in 2007, the average for those medium-sized OECD countries was around 30%, considerably lower than the current Canadian corporate tax rate. Another issue that is of concern to most countries is the tax rate on dividend income. And so the next chart shows for the years 2000 and 2007 the overall tax rate on dividend income, taking account of both the tax paid at the corporate level in corporate tax and the personal income tax that's levied on dividends. And you can see here that once again, almost all countries, or all countries in the chart, almost all, have shown a considerable reduction in the taxation of dividend income. Canada has certainly taken part in that cut, but you can see that Canada is above the OECD average. It was in 2000, and it still was in 2007. So again here, Canada has a comparatively high tax rate. One other aspect of the corporate tax system is the incentives that are given to research and development. And the next chart shows how Canada compares to other OECD countries. And what you can see from the solid black bars is that Canada offers fairly generous, but not extremely generous, incentives towards R&D for large firms. But the little diamond shape above that shows that Canada has an unusually high R&D tax incentive for small and medium-sized enterprises, about the third largest in the OECD. If I move on to looking at the taxation of labour income, we see that Canada, like other OECD countries, has cut its top personal income tax rate quite significantly over the past 25 years or so. And Canada lies more or less in the middle of OECD countries in its current top statutory personal income tax rate. However, a measure that we use more often to look at the taxation of labour income is something that we call the tax wedge. And that's something that measures the difference between the cost to employers of employing a worker and the amount that the worker actually takes home to spend. And what you can see here in this chart is that Canada is substantially below the OECD average. And the reason we've split this bar up into personal income tax, employee social security contributions, and employer social security contributions. And the chart shows that it is not because Canada has a particularly low rate of personal income tax that accounts for its low overall tax burden on labour, but because its social security contributions are substantially lower than average in the OECD. And this chart looks at the situation for a single worker who's earning the average wage. The next chart shows that for that same worker, almost all OECD countries have reduced the tax wedge between 2000 and 2006, and Canada has been part of that trend. The next chart shows the tax wedge for lone parents, and typically lone parents don't earn as much as the average worker, so we've looked at a lone parent earning about 2/3 of the average wage. And you can see that Canada applies a very low level of overall taxation to the wage income of lone parents, around about the same amount as the United States, and significantly less than almost all other OECD countries. Only New Zealand and Ireland have substantially greater preferences for lone parents at that income level, and they in fact have a negative tax. The final chart on labour income shows a very simple measure of the progressivity of the tax burden on labour income. And you can see that the Canadian tax system has somewhat below average progressivity, and that progressivity fell between 2000 and 2006. However, I should say that I believe the figures would show an increase in progressivity if we looked at 2007 because of the changes in your personal income tax system that were introduced in 2007. Let me finally move to the comparison of taxes on consumption. Canada, like all but one of the OECD countries, has a value-added tax, what you call a general sales tax, and the exception being the United States, of course. And the black bar shows the standard rate of your general sales tax in 2007. And I should clarify here that that is the federal rate that is shown, not the federal plus provincial rate, but that the revenue that we show is both the federal and provincial revenues from value-added tax or general sales tax in Canada. And you can see here that Canada raises a relatively small proportion of its income from GST. And the final point chart shows a comparison of environmentally related taxes. In most countries, these are primarily taxes on motor vehicles and motor fuels, but there are a number of other more minor taxes as well. And you can see that Canada falls very much in the group of countries that do not use environmentally related taxes very much. It's much more on a North American model, similar rates to Mexico, somewhat higher than the United States, and substantially lower than most European countries. So that's the end of my presentation. Thank you very much for your attention, and I'll be very happy to answer questions.
Okay, and thank you very much. We'll now move to our question and answer period. We have Mr. McCallum will start us off with a 7-minute round. Mr. McCallum, the floor is yours.
Thank you, Mr. Chair, and thank you for all the witnesses for being with us today. I'd like to ask a few questions and perhaps try to ask each of you, and since I don't have much time, if you could try to be fairly concise in your answers, I would appreciate that. Professor Brooks, you used the word social engineering, which is perhaps a bit pejorative if I used it, although I have. But I have said on a number of occasions that rather than government discriminating, shall we say, between tax credits for young hockey-playing Canadians but not for young violin-playing Canadians, we would prefer to see general income tax reductions rather than what one might call boutique tax cuts. So I guess to each of you, as a general matter of tax policy, would you think that general income tax cuts would be preferable to narrowly directed tax credits as a matter of policy? Mr. Brooks?
Well, I certainly agree with that. There's just a long list of problems that you create when you try to deliver these subsidies through the tax system.
Okay.
I mean, they're hidden subsidies, they're not transparent, the government's not accountable for them.
Okay, sorry, I got your answer. I want to go through.
You should get rid of, I can't think of hardly one I would retain, frankly.
Mr. Conway?
In our brief, we talked about simplicity and the reduction of the non-proliferation of credit, so we would prefer to get back to basics, be very simplify it, and then direct incentives more specifically. So the answer would be
Thank you very much. And Mr. Hetty?
Yes, I also would very much agree. In the OECD, we think that it is better to have a simple tax system and to have a low general rate rather than a higher general rate with a large number of special exceptions.
Thank you. On the question of consumption tax, which we call the GST, or versus income tax, given the choice between reducing consumption tax in Canada versus reducing income tax in Canada, which would you prefer? And I do note, maybe I'll start with Mr. Hetty, and I do note that Canada is already relatively high on income tax, relatively low on consumption tax, so which would you prefer?
Well, I think it's
as a matter of tax policy.
Depends on what your
I'm trying to be non-political.
Oh, don't bother, John.
As a matter of sane tax policy.
It's okay, John. Let's ask.
Sorry.
Okay. I think that if the purpose of the tax reduction was to promote economic growth, there is a considerable amount of evidence that a shift from personal income tax towards consumption tax would promote the rate of economic growth, keeping the overall tax burden constant. However, there is a concern that a move of that sort could increase income inequality. So, to a large extent, the answer to the question depends on the relative weight that you put on reducing income inequality compared to increasing the rate of growth.
What if you...
I think is a question that is for politicians in the countries concerned to decide, rather than the OECD.
Right. What if you focus the income tax cut on relatively low income earners?
Well, if you did that, you might well get the best of both worlds, yes.
Thank you. Mr. Brooks?
I agree with
Chris, I mean, it is a dilemma. Consumption taxes are important revenue-raising taxes. They tend to be quite efficient. On the other hand, the income taxes are more progressive, and so there's kind of a conflict between these two objectives that I talked about.
Right.
But it does seem to me in Canada now it was a terrible mistake to reduce the GST because it collects a substantial amount of revenue in a relatively efficient way, and if the government wanted to have tax cuts, it seems to me the place to cut would be at the low end of the income scale, on the income tax.
Maybe I'll move on because I'm running out of time. I have one last question about corporate tax cuts. Well, a quick answer, but...
Well, our brief indicated we did not advocate a drop in the GST.
Okay, thank you.
At its current level.
On corporate income tax, I might point out to Mr. Conway that we advocated lower corporate tax before the government did it, so it's one of the areas in which we do agree. But I might also point out to Professor Brooks, we've also committed to a very aggressive so-called 30-50 plan, which will reduce poverty by 30% over 5 years and child poverty by 50% over 5 years. But my question is, and I'll start with Mr. Hetty, I've never been a supply-sider or a Laffer curve type that thinks tax cuts pay for themselves. But on the corporate tax side, they might to some extent when you take account of location not only of activity but reported income. So my question to you, does the OECD have an answer on this question? To what extent corporate tax cuts will generate additional revenue so as to be partially self-financing?
Well, we think that lower corporate taxes do increase investment and so would increase profits. And we also think that countries with lower corporate tax rates would be a more attractive place for multinational groups to locate their profits. But we don't have any evidence to suggest that those changes would completely finance the tax cut. We would expect that a cut in corporate tax rate would normally involve a reduction in revenue. And what has happened in a lot of OECD countries is that they have accompanied cuts in the rate by broadening the base, removing various sorts of special exemptions, and perhaps reducing the generosity of depreciation allowances, and that's how they've managed to maintain revenues while cutting corporate rates.
Is there time for others to answer? Or?
It's not. The time is gone. Monsieur Crest,
Sorry about that.
You have 7 minutes.
Merci, Monsieur le Président.
Thank you, Mr. Chair. My question is for Mr. Hetty. I want to talk to you about something that does not figure in your slideshow, but I have a question about tax havens. Now, many countries are having problems, and a lot of business, a lot of operations are happening underground, and there's a lot of tax evasion that's occurring through the use of tax havens. So the question is, who are the winners and who are the losers? Do you have any data or statistics that you can talk to us about and that we can use?
I don't have any data. One of the problems with tax havens is that they're typically rather secretive, and it's very difficult to get the data. There have been a number of estimates but they vary widely as to the amount of tax that is avoided by the use of tax havens, but even that doesn't tell us who benefits and who loses from that. So while we do believe that there are serious problems, I'm afraid I can't provide an answer to your question.
OK, mais il en reste pas moins que les États.
Nonetheless, states are looking for ways to raise revenue. And Mr. Hetty, if you don't have any information on that, well, there's an international group that analyzes these questions, and I believe that the OECD had taken part in that debate. Here in Canada, we're unable to quantify how much revenue, how much corporate revenue is raised through the help of tax havens. But perhaps Professor Brooks, Mr. Conway, do you believe that it's dangerous to undertake a study on tax havens if we don't understand the significance of that phenomenon?
In our experience, we believe we're calling for a reduction in corporate taxes. We believe it stimulates foreign investment, as Mr. Heddy pointed out. Stimulates direct foreign investment into the country, and it's good to stimulate the economy. One example we used was the Ireland example, where they significantly reduced taxes and had a very strong growth in the economy.
Mais est-ce que vous vous rendez compte que dans
However, do you realize that taxes can be cut perpetually? But if we want there to be a minimum social acceptance of a minimum level of taxation, well, we have to be able to convince the general public that there are people who can't get away with tax evasion and do so through a legal way. Doesn't that strike you as essential to collect relevant data? In fact, it would be very difficult to make such a recommendation without fully understanding the impact of tax havens, because we're talking about billions and billions of dollars.
I'd just like to pick up 2 points that you've made in that last presentation. You started off talking about tax havens. A tax haven, by definition, is a jurisdiction where taxes are lower than somewhere else. At the latter part of your presentation, you equated a tax haven with tax evasion. That is categorically incorrect.
Donc, j'ai dit qu'il y avait 2 catégories de dépenses. J'ai pas dit que...
Said that there were 2 categories of expenditures. There were 2 ways. There was tax evasion and the use of tax havens are 2 completely different phenomena. I didn't say that they were inter-exchangeable, but I'm wondering if there are any formal legal ways. In fact, don't you think that Canada is missing out on essential revenue, significant amounts of revenue, because of that situation? Answer. We have a corporate perspective. If we are to spur investment in the country, well, we have to go to the international market, and it's very competitive. You're right. Various countries are cutting taxes, but if we don't cut our taxes accordingly, we will not be competitive, and investments won't be made in Canada. I'm told that the U.S. model is very different, and that taxes are levied in a more uniform way. Do you have any additional information on that?
I don't have any additional information. However, a general comment is, if we're talking about tax havens, and by the way, there are a number of jurisdictions in Canada which are classified as tax havens for international investors. The issue is not whether it's tax evasion, tax avoidance, or whatever it is. The issue is the corporation, or an individual for that matter, complying with the law of the land as it's written today? If the law of the land today says I can invest in some country, well, then I would be prudent to do that. Therefore, to go back to your original question, if you're concerned about tax havens, by all means, try to do a study on the impact of tax havens. But be careful the terms you use for tax havens.
Oui, effectivement, dans ce livre sur les paradis fiscaux.
I have here in hand a book on tax havens. And there are 3 reasons that would justify multilateral action. In fact, several countries have struck a committee to study this issue. I'm just wondering if you're aware of the magnitude of this problem, and is there any revenue leakage happening here in Canada? Because even Revenue Canada isn't able to put forward figures.
Well, of course, the something we can't discover.
Rappel au règlement, juste pour Monsieur Craig.
Point of order, please. I'd just like to know what book Mr. Crête is quoting from. It's a publication on tax havens. It provides a brief review. It's a publication of a very well-known series. I believe it was published in 2006. Yes, it's published by Découverte.
Time is gone, though. We'll have a very quick answer.
I'm just not aware of any Canadian studies on how much, in effect, income of Canadian multinational corporations is, in effect, put in tax havens and lost through tax evasion or avoidance. But there are some American studies, and the numbers are absolutely huge. And there isn't any reason to believe that the numbers wouldn't be comparable in Canada. And we should undertake a study. And a number of years ago, in one of its reports, the Auditor General suggested there were billions of dollars of Canadian tax revenues lost through the manipulation of transfer pricing by Canadian corporations. So that Canada ought to look at those rules in its international tax system that in effect permits that, but also Canada should be supporting the OECD and other international organizations that are trying to prevent harmful tax competition, that are trying to reduce bank secrecy laws in tax haven countries, and that are trying to increase the use of exchange of information from countries that we've traditionally regarded as tax havens. So it's a crucially important area.
Mr. Damasco.
Mr. Hetty, I just had a question to begin with for you. Can you tell me, are there any examples of countries, G7 countries, G8 countries, what have you, where they have higher corporate taxes, high value-added taxes, higher personal income taxes, especially on upper income levels, where they have higher productivity than Canada, where they have lower unemployment than Canada, where they are outpacing Canada in growth, where they have ongoing budget surpluses or decreasing national debt? Are there any examples of those countries right now, other than Canada?
I'm not completely sure about the unemployment rates in all of the OECD countries, but certainly there are countries with considerably higher taxes than Canada, which have good economic performance and have good productivity growth. Sweden is one example, which has a tax to GDP ratio of around about 50%, very much higher than Canada. Finland is another country with good economic performance and high rates of tax. So I think, as Professor Brooks said earlier on, that looking across countries, it's very difficult to see any consistent relationship between tax and economic performance, because there are so many other things that influence economic performance.
Okay, can you can you tell me? I would personally argue, and I'm sure I could make a pretty strong tax case, that it's likely not in a country's interest to have very high taxes across the board, and consider that you could maintain growth and high employment and so forth, and have no broad penalty on the broader economy. I note one of the things that I noticed on your presentation was some countries, for example, significantly increased their value-added tax over the last comparing what was that 2005 to 2007, and I note, for example, one of them is Italy. Can you tell me when there were others, Norway, Sweden, when those countries increased their value-added tax, did that result in higher personal savings? Did it result in higher employment? Anything like that?
Well, first of all, I have to just say that that chart is not showing the VAT rate in two different years. It's showing the VAT revenue in 2005 and the VAT rate in 2007. So it doesn't show that VAT rates, for example, Italy has increased the VAT rate.
I see. So there are no examples of countries that have actually increased their value-added taxes over those 2 years.
Let me then go on and say that there are countries that have increased. A lot of countries have increased their VAT rates. The most recent example that comes to mind is Germany, that increased its VAT rate by 3 percentage points.
What did that do for its economic growth? What did that do for its economic growth or employment or personal savings?
I don't know about its personal savings. Its economic growth, I think, has improved, but I'm not sure that it's necessarily due to consumption tax, to the increase in VAT.
Okay.
There were other changes.
I'm sorry, I don't have a lot of time. If there is zero savings in the economy, or you're approaching zero savings, is there any difference between reducing a personal income tax or reducing a VAT if people are spending virtually everything that they're earning? Isn't it true that virtually everything becomes a consumption tax?
If everybody, well, sorry, there is a difference, which is that the personal income tax is more progressive than the consumption tax.
Sure, but broadly, and I wouldn't argue that with you, but very broadly speaking, if you have zero savings, it doesn't matter what form the taxes are, everything is being consumed anyway. Is that not correct?
That is correct.
Thank you. Mr. Conway, I wanted to get to you on a couple of points that you made. First of all, in the spirit of non-partisanship, I just wanted to ask you, you mentioned that the federal government should maintain projected debt reduction and schedule whereby the majority of annual surplus is directed at federal debt. The government has paid off $37 billion in debt in just over 2 years. Would it have been a good idea at the end of the year to create a $7 billion, an additional $7 billion fund, kind of undirected toward unspecified infrastructure programs? Would that have been a good idea, or were we better to pay down debt as the government did, in your opinion? I never named anybody.
Nancy, go ahead.
I was chirping about it. Let me answer the question.
Thank you. Don't worry about these people here. It's just
Okay.
watch your light and try to ignore.
Thank
Mr.
you.
Turner,
We have identified within the program spending, as I mentioned, there's 1/3 of the program spending that relates to old age security and healthcare spending, something we know is going to increase as the population ages. So that should provide us the incentive to find the money to, through various means, and one of the ones we were suggesting was to pay down the debt in order to reduce the interest on the debt, so that we would have the money to meet the obligations that the elderly and the sick have had.
One more question. Okay, great. Thank you. You also, in your report, and I appreciate that you mentioned, Mr. Gorman, the difference between tax evasion and tax avoidance. We'd love to help investment in Canada avoid a very what we see as a very regressive tax, which is the retail sales tax, by harmonizing or moving towards a harmonized GST across the country. Your report talks about it being the single most important action that these provinces could take to improve their provincial and Canada's overall tax competitiveness. Could you elaborate on that a little bit? Do you see examples of where that is in fact the case?
In my personal experience, at least in Nova Scotia, the major benefit of harmonization has been in the elimination of what usually is called red tape, the number of auditors, the number of sales tax returns, et cetera, virtually all of which gets translated back into the business, especially small businesses. Unfortunately, you really can't isolate the impact of a measure like that and say it created something or other. Yeah. But as a general statement, I'm quite convinced that there's no business person in Atlantic Canada who would go back to the old system.
Would it help foster better East-West trade?
Pardon?
Would it help foster better East-West trade, in your opinion? More domestic trade, East-West?
Mr. DeMastro, no, that's it. Sorry, don't worry about answering that. Mr. Turner, the floor is yours.
All right, thank you. Mr. Conway, do you guys agree, yes or no, that spending money on infrastructure is a good idea?
We have indicated that it is appropriate to control spending, but when that spending on infrastructure is the way to go. If we are going to look at what we're spending our money on, infrastructure spending is a good direction.
All right, good enough. Mr. Brooks, good to see you again. I haven't talked to you for a long time. Yes. Well, Mr. Brooks, let me ask you a couple things. The Minister of Finance, when he was introducing his most recent budget, said that his tax-free savings plan was basically the jewel in the crown of this particular budget. And you've just told us that this thing is going to cost billions, in your own words. The minister only, I think, allocated $50 million in there as revenue that would be lost because of the tax-free savings plan. Can you tell us really briefly why this thing is such a bad idea and will be so costly?
Well, I'm just using the government's own number. It doesn't cost anything in the first couple of years, or it costs very little, because you don't get an upfront deduction. In effect, you get to put your after-tax savings in, and then any income from capital you earn is tax-free forever.
Right. Yeah.
And so when it's going to get costly is 20 years from now, or 10 years from now. And I think the government itself has estimated the cost 20 years from now is somewhere close to $3 billion.
All right, let me ask you this based on your other comments about progressivity. It seems to a lot of tax planning professionals that the tax-free savings account will be of the greatest benefit to the higher income earners who will be able, for example, who have maxed out their RSPs or have sizable pension income to now be sheltering $5,000 a year from, say, capital gains tax. Does that worry you?
It worries me greatly. Here's two things that's wrong with the plan. I mean, two fundamental things that are wrong with it. It stands tax equity, as we understand it on our income tax system, on its head. Because the difference between these prepaid tax savings plans and a registered retirement savings plans is that in these prepaid tax savings plans, the income from capital is never taxed.
Right.
Which means, if I invest in one of these tax prepaid plans, and I get lucky, and over the course of 10 years make $2 million on my investments, that whole $2 million is free from tax. And as you probably read in the newspapers just a few days ago, there are Canadians who apparently have $250 million in RRSPs. So we're not talking peanuts here. If I put money into one of these plans, and I make $1 million, it's never taxed. On the other hand, if I put my money in savings in one of these plans and I lose money, it's never taxed.
Right.
So here we've got a person who's made $1 million and a person who's lost money. Both are taxed the same.
Okay, Mr.
Namely
Brooks.
zero.
Right. Okay.
That is inequitable.
Yep. Okay. Thank you. Bad idea. Now, Mr. Headley, Mr. Heady,
Yes.
it's a good idea. It's a good idea for retirement, not a good idea for tax avoidance. Mr. Headley.
Yes.
Just
Yeah.
relax. Okay, carry on, Mr. Turner. If you got it.
Mr. Headley, Britain has had a tax-free savings plan variety for a while. How does it differ from the one that has been proposed in Canada? I don't know if you're familiar with ours, but this is going to be a savings plan you can use. It's not related to retirement. It's not specific for any kind of goal. It just allows people to put aside money and not pay tax on it. How does that differ with the one that's in place in Britain?
Well, I'm not familiar with the Canadian scheme. The scheme, the current scheme in the UK is tax-free. Yes, you put in money that you've paid tax on, and you don't pay any tax on the return. But there is quite a low limit on the amount that you can put in.
Is it open-ended, or is it intended for retirement purposes?
No, it's open-ended. You can withdraw the money at any time.
And what's been the experience of revenue loss to the government?
I don't have the figures, I'm afraid, on the revenue loss to the government.
All right, so we don't know the cost.
For eight. Floor is yours, 5 minutes.
Ma question s'adresse à
My question is for Mr. Heddy. In your slide presentation, you presented several tables, a host of statistics which draw the link between revenues and government revenues and levels of taxation, the progressiveness of the tax system, etc. You drew some comparisons between various countries. The study that we are undertaking here in this committee, to my mind, is one in which we are trying to understand whether or not Canadian taxation, as it is the best competitive tax system possible, and does it allow for all Canadians to live adequately. Now, among the tables that you've presented, are there any measures that would indicate to us which country has the population that lives, the highest percentage of its population living under the poverty line? Or what countries are the countries that are maintaining the highest levels of economic growth, and the countries that have introduced the most interesting social and tax measures?
I think it's not possible to just simply look at look at the tax ratios and to talk about just, for example, the level of income or the incidence of poverty, because there are so many other things that affect that. But I think what you can do is you can compare the progress that different countries are making and try and relate that to the taxes that there are. And when we study that, what we find is that countries that raise a lot of their money from corporate taxes do not do as well in terms of growth as countries that raise more of their taxes from consumption taxes. So if you're looking at trying to change the tax system in a way that would increase the rate of growth in Canada, the logic of that experience is that you should reduce corporate tax rates and replace the revenue with consumption taxes.
C'est intéressant ce que vous nous dites.
What you're saying is quite interesting. But I do want to get back to one particular issue. Which countries have the fewest number of citizens who live under the poverty line? Does the OECD have such statistics?
We do have statistics. I can't tell you exactly which are the countries with the very lowest, but I know that they would include countries like Denmark, Sweden, Finland, and probably Norway. And these are countries with tax to GDP ratios that are considerably higher than Canada's.
Okay. Dans le fond, ça répond quand même assez bien à la question que je posais.
That answers the question that I was asking you earlier. Because once we're able to identify which countries are the least afflicted with poverty, well, then we can start focusing on what kind of taxation system those countries have. We can also look at how they impose corporate taxes, the level of consumption taxes they have, and look at this and derive how these systems help reduce poverty. I find all of that quite interesting. Thank you, Mr. Heddy. I have a question for Mr. Conway.
The next round. So we'll now move on to Mr. Wallace. You have 5 minutes.
Thank you, Mr. Chairman, and thank you for our guests for being here today. I'm going to start with the FEI for a moment. You represent financial executives from a corporate perspective, I'm assuming, right? There's not just corporate issues. So my question to you, if you look at one of your things under federal spending, which I agree with the majority of what you say, you've got research and development in there as one of the items where you think we could be reallocating funds. And then I looked at Mr. Heddy's chart that shows Canada fairly, from large firms, we're sort of middle of the pack, maybe a little ahead of the pack, and from small and medium-sized firms, we're quite invested in tax incentives for R&D. Well, I guess my question is, where would you like to see us? What more could we be doing? Are we not doing a pretty good job in that area already? What am I missing here based on what I'm seeing in a comparative basis? Because we're talking about being competitive from Mr. Heddy's chart compared to what you're asking for in your report.
Right. Well, in our brief, we urge the government to implement mechanisms that support Canadian economic value creators. Canada needs the champions that some of the SHRED credits, the R&D credits, which is a good system, are promoting. I mean, we look at Research in Motion as a prime example of a Canadian corporation that's come, from nowhere X number of years ago to a global leader today. We need more RIMs in this country. And so spending on infrastructure directed, one of our points was we need to control and the spending, as we said, for the various reasons we discussed, but we said when we're looking at spending, we have to direct it. And the directed is towards infrastructure, and within the infrastructure we've talked about R&D because it promotes the Canadian economic value creators.
It's a general, I haven't had a chance to read the report, of course, so it's a general statement that this is an area that that could use more funding. You're not saying exactly what percentage or what an increase of any certain amount.
We're saying as we're looking at where we're spending money,
right,
spending on infrastructure that makes Canada more competitive is a good thing. And then when we start thinking about infrastructure, we think about R&D. We think about training, which is one of the reasons we put forward the investment tax credit concept to promote Canadian businesses to do more training of our labor force.
Segueing into my next question on the human resource portion of your human resource training and development piece. You talked about broadening the definition of what's currently deductible, introducing a tax credit for qualified education. Can you give me some concrete examples of what is not included and what you'd like to see included as general
specifically, there's an IT bulletin. I don't want to get too much into details, but there's actually an interpretation bulletin which specifies that certain types of training is deductible in the current year, and other types, interestingly enough, that are longer term are considered to be of a capital nature, and they need to be capitalized and the deduction spread over years. For us, that's counterintuitive. If you're promoting training and you're increasing the value of your workers, that should be something we promote, not to defer it over a long period of time.
So if I give you my card, you'll be able to send me...
Excuse me?
If I give you my card, you'll be able to send me that that note?
Absolutely.
Okay. So to stimulate world-class champions in continuing education, is that a new program that you want us to establishing this continuing workplace education and training? Is that a program? Is that a...
Since it's Dr. Gorman's idea.
At the moment, we do not believe there is any such facility in Canada, at least as far as we've been able to discover. One of the real problems that corporations have is obviously finding in-house training, continuing education programs, things of that nature. We believe that if there was a university or a community college that would take on the task of literally being a clearinghouse of these kinds of programs and could get the Canadian business community to be made aware of their facility, it would be a tremendous service to the business community.
I have one more question for you. Hopefully I have some more time after that. But we've heard from other economists that we've been doing this study about the EI system and maybe that we should have an experience rating system in terms of the cost to businesses, those who don't lay off too often and don't experience a lot of unemployment in their industry would have a different rating in terms of their costs for EI than those industries that do. Does your organization have any comment or any position on that?
We have never specifically taken a look at any EI issues of that nature. No.
Thank you very much.
Oh my gosh.
Actually, we're a little bit over already, but Mr. McKay, 5 minutes yours.
Thank you, Chair. Thank you, witnesses. It's pretty obvious to pretty well everyone outside of this government that at some point or another carbon is going to have to be priced in some manner or another. And I'm looking at your chart, Mr. Heddy, on page 19, where you talk about environmentally related taxes. And my question I have for you is, if you flip that chart, you could pretty well chart Kyoto compliance, with Denmark being probably, and Norway and various other countries up at the top end being fairly close to, if not Kyoto compliant, and the ones at the bottom end being the U.S., Mexico, and ourselves not entirely Kyoto compliant. Probably the exception might be Japan. Is that a fair observation?
I'm afraid I've never thought of it that way, and I think that, but certainly I do think that environmentally related taxes, particularly ones that are closely related to carbon, are a very good way of trying to become compliant with the Kyoto Protocol.
Your view that carbon-related taxes or environmentally related taxes actually change behavior?
Yes, we do have evidence that they change behavior. Yes.
Professor Brooks, you were a little earlier a little bit concerned about, if you will, the third pillar of tax policy, namely the influencing and the changing of behavior. Would you be of the view that excise tax or consumption tax, as it relates to an environmental issue, is a good thing, or is that not a good thing?
Well, not surprisingly, I like excise tax. I like all taxes.
You might be in a minority in that point.
Sure, I love paying my taxes, and I think they buy us, you know, the kind of society that I'd like to live in. But I think taxes are useful in terms of getting prices right. If there's some activity that is generating externalities, negative externalities, I mean, a market economy will only function efficiently if prices reflect the full cost and full benefits of the activity. Yeah. And therefore, if we've got carbon and we know there's this enormous social cost, the market can't perform properly. And so we got to get that price right, and the way we do it is by imposing a tax on carbon to try to get the price right. So I'm not opposed to those.
We have been living in a bit of a la-la land in terms of both water and air. We've never priced those as goods, and so the product out of environmental degradation has never actually been priced into the ultimate product to the consumer. I want to get in both comments here, both from the business side and from your side. Is it your view that Canada is ready to deal with the issue of environmental pricing of environmental carbon by means and the question really is, by what means? And I'd ask that both of Mr. Conway and Professor Brooks.
Well, I just make the general comment that I think pricing carbon and other activities that in effect cause social externalities is important. We've got to get the prices right, and therefore I'm not opposed to pricing any product that in effect generates negative externalities, and by imposing a tax on it. I mean, that's what excise taxes are all about. They're really not taxes. They're the government attempting to get the price of those products correct so that the market can perform its allocative efficiency function. And so whether Canadian, I mean, you know the politics of it as well as I do.
We do. Yeah.
So I won't go into that. But I just don't think there's a case for not doing it. I've never heard the case for not doing it, frankly.
Okay, thank you. Mr. Conway?
One of the themes running through our entire submission was simplification, which is why we called for the harmonized sales tax, the group tax reporting, and a review of the tax system. The Tax Act is huge now. It's got to be looked at. In terms of environment, I think a study should be undertaken, in the same theme for harmonizing across the country. If everyone comes up with each their own system, it's going to be like what we have with the GST right now and the non-harmonized provinces. Consequently, I would urge the government to consider, since the environment issue is in front of us, to have a harmonized study, bringing in a harmonized system with all provinces and the federal government looking at that, and carry it through to really all the other themes, HST, and move towards a much more harmonized, efficient system.
BC goes one way, Alberta goes another, and there's no federal leadership on top. We agree.
Yeah, I think the point has been made, and the time is gone, so we'll now move to Mr. Dykstra. 5 minutes.
Mr. Chair, I'm going to use the 10, maybe 20 seconds of my time to point out that, in all due respect to all four of you gentlemen, one of the reasons that we tried to stay away from talking about, and the motion that Mr. Pichetti and I put on the floor, was about tax policy and how we should tax versus how we should spend. And one of the reasons that we've gotten into this, we're trying to, as best we can, and I know this is Parliament Hill and partisanship gets involved in it, but you can see how once we start to talk about spending, we move directly into the partisanship of who can spend the taxpayers' money better. So I don't know, maybe this is just a general comment, Mr. Chair, that if we're gonna expand the motion, we should do so formally to say that we also are going to ask our tax policy experts to give us advice on how we should spend taxpayers' money, because it makes it extremely difficult to work through this otherwise, and I think very difficult for our researchers to be able to, and analysts to be able to give us a good indication of what is some top-notch advice that we're getting from you gentlemen. Not to say that we aren't getting good advice from you. It's just that it gets itself mired in the muck. Mr. Brooks, I wanted to ask you, you did comment about the difficulty around the current tax policy, whether it be from the last 10 years, the last 5 years, or the last 2 years, the difficulty that it has with respect to those of a lower income, in the sense that it's difficult to find a way to assist those at the lower end of the pay scale. And I wondered a couple of things that we did, and really actually maybe a question for all four of you, whether this is something that we should continue, and that is that we've I guess hired the threshold, if you will, for those who are at the lower income scale in terms of how much they have to pay in federal tax. So, for example, in 2006, about 625,000 people came off the federal tax rolls, and an additional over 300,000 in 2008. And this leads into the whole part of your comments about a consumption tax. Once you end up with the lowest income folks, and we have to pay some political concern to this, not just tax policy concern, so I want to get that perspective from all of you, and that is, once we reach a point when we have the lower income scale of our wage earners not paying federal tax, how do you propose that we can find a way to benefit those individuals and families? And the way that we've proposed, and I'm asking you, and I know your opinion on that, but is there then a better way to propose other than lowering the consumption tax, or maintaining a GST credit, or offering some form of a credit to these folks because they aren't able to pay they aren't paying federal income tax anymore, which is a positive thing, while at the same time they're at the lowest income threshold in the country?
That was a 2.5 minute question, so we'll have 2.5 minutes to answer, so carry on. Mr. Brooks, you can start.
Well, I think the only way to reach low-income people is through transfer programs, and so that I think, for example, it would have been much better policy not to reduce the GST, but in fact use that revenue to increase the working income supplement, which I think is a very good program and can be substantially increased. In the United States, the comparable program is $4,000 a year. the Earned Income Tax Credit. I think the money could well have been used to do that in order to increase employment and so on. I think it could have been used to increase the child tax benefit. That clearly benefits low-income people. I think it could have been used to provide more early childhood education for children. Clearly benefits low-income people. So that I just think there would be a lot of ways. If what you're concerned about is low-income people, I don't think the GST credit did anything for them.
No, I'm concerned about them. Yes, it isn't.
Food is exempt. I mean, most of the necessities are exempt. That can't be the well, sorry, I didn't mean to be partisan.
It's interesting that Mr. Dijkstra brought up the issue of the affordability of consumption taxes to lower income earners. Just as you indicated that possibly we shouldn't confuse one objective with another objective, we have proposed that the GST should not be reduced further. If there is a feeling that an incentive has to be given to the lower income earners, I wouldn't do it through consumption tax. If the GST, you always have the ability to provide relief on the GST to the individuals earning less than a certain threshold through a credit mechanism. But I wouldn't do an across-the-board reduction of the GST just for that selected, to benefit that selected constituency. There's other means. It's a broad, the consumption taxes is a broad measure, which applies across all of the constituencies. If you want to target benefits to the low-income earners, there are other ways.
Mr. Pichetti, 5 minutes.
Thank you to the witnesses for appearing. Thank you. It's very interesting. I'm going to try and ask one question to the three of you and maybe frame it a little bit differently. But basically, we're looking at the government needs X number of money to run the government or provided services, and I think Mr. Brooks stated the 2 or 3 different criteria that it usually follows. But if we were to look at just how the government raises revenues, but there's always the other side of the equation, which is running programs. Now, if I look at your brief, Mr. Conway, you want to simplify, and I don't mean to pick on your brief necessarily, but you want to simplify the system, but then in turn you say we need money for training and we need to put money into commercialization and things like that. So in your opinion, what should we do? Should we be throwing all the tax revenue into a pot and then as the government determines what its priorities are to invest in that fashion, or should they be dedicated funds when we look at whether it's be CPP, QPP, unemployment programs, or any new initiative? So if we were to take the example, for example, training or commercialization, should there be a separate revenue collected to so that there is accountability to start one of these programs?
We use the term patchwork quilt of complex regulation. The Tax Act has doubled or tripled or quadrupled in size since I took my CA. I'm glad I don't have to do it again. So our first recommendation, which is actually our last recommendation in our study, is to move to a comprehensive review of the Tax Act and simplify it, because right now there's been so many initiatives one year after another.
I understand, but
we've got to bring down to a base.
But you say that in your first point, but then in the third point you say, but let's put money somewhere else.
Well,
so that complicates it even more, because this is just what you're asking for. Again, I don't mean to pick on you, but the next person will ask for something else, and the next person will probably ask for 3 or 4 additional other things.
I appreciate that. We did indicate we're trying to look to a to lessen the proliferation of imbalances across the system. We recognize there have to be some selective incentives in particular areas, but we're just pointing out that the Tax Act has gotten so thick, and year after year of budgets.
So do we use your criteria, or how do we select what is how do we simplify it? Where do we cut? Where do we draw the line? Where do we draw the line in the sand?
I think it comes from doing a comprehensive review and starting from almost a ground zero, and then selectively identifying the areas that you want to incent. right now embedded into the Tax Act. If we take the CCA classes, for example, there's something like 45 CCA classes. You can't find things anymore. We can start from scratch, go down to most OECD countries have around 10 classes. Go down to 10 classes and just make it a lot simpler. We use the example of high-priced consultants making lots of money, something that only the large corporations can afford to maximize their tax availabilities.
So the government should do the same thing and hire consultants, okay, because we have limited time. I just want to ask Mr. Brooks, maybe you can answer in the same vein, but just because I may be picking on one particular aspect of your 10-minute presentation, but you said at one point, you know, if the government, if services or the spending doesn't provide any services, the government, if there is no purpose for these money spent, there shouldn't be, it shouldn't be provided?
Exactly. If there's no legitimate government objective being served by these tax expenditures, and as I say, there's over 150 of them in the Act.
Right.
Should go systematically through them. If no legitimate government purpose is being served, they should just be taken out.
Again, on a nonpartisan basis. So if there is a legitimate purpose, would the government use its revenues, its general monies from general revenues, or should it be a dedicated task for that specific
No, I don't think it should be a dedicated tax. I think that the government should design a tax system that is as equitable and as efficient as possible to collect the amount of revenue they need, and then allocate that money to spending programs based upon their priorities. But I don't think you should try to link, in effect, the tax that's collected with something, because there's never a connection between them.
And the basket of collected revenues, should that be a combination of the consumption, corporate and personal?
Exactly. And indeed, even on EI, I don't understand why we got EI premiums. I mean, because it's totally unrelated to the benefits. So you either go to a system where you experience rate, which some people are in favor of, I'm not. What I would do is take those EI premiums and just turn it into a general payroll tax. Because as these charts show, one area where Canada is below on international standards is in Social Security contribution, essentially payroll taxes. So I think what we should do is take those EI premiums, turn it into a federal payroll tax, collect the money through that payroll tax, and finance EI out of general revenues.
Just, Mr. Heddy, just quickly.
Okay. Tight one for Mr. Heddy, I'll allow it.
In the same sort of vein, but more towards the revenue side, on the corporate side, when is enough enough? When is it low enough where it really won't impact whether, you know, you'll attract more additional foreign investment? And I'm referring to corporate taxes. What's your experience? And the only country that I can think of that is doing a good job is Ireland, but is there a point where the corporate taxes won't make a difference and a company will stay or make the investment, whether the corporate taxes are at a certain rate or not?
No, I don't think you can say that there's any corporate tax rate where a further reduction wouldn't encourage additional investment. What I think is that there are some countries where changing the corporate tax rate doesn't make much difference, but those are countries that are with very weak tax administration and very poor conditions for general conditions for investment. But for a country like Canada, I couldn't see that there's some rate below which you shouldn't go.
The Social Security programs, that's what I'm looking at. Will a company or a corporation look at Social Security benefits like Canada has?
Sir, and then we'll move on.
I'm done.
Go ahead if you have an answer.
So we know that companies, when they're investing, look at the Social Security contributions they have to pay. We don't know whether they look at the benefits, but I would assume that they do look at the benefits, yes.
Thank you very much. Mr. Menzies.
Thank you, Mr. Chair. Mr. Conway and Mr. Gorman, I know you've done a lot with assessing the provincial taxation systems, and we've also heard from you and many other witnesses prior to you folks about the need for harmonization. Can you give us an assessment of, and I think that we all recognize, especially our witnesses on asset-backed commercial paper last week, also pushing for that. Can you give us some assessment? We realize it's provincial jurisdiction, we can't interfere. Can you give us some assessment on how we might move forward with that, how we would encourage the provinces to listen to what you and others are saying?
We'd be pleased because we think HST is going to be one of the things that would really move forward in terms of the simplification of the system. One of the resistances you'll meet for the provinces taking it on is obviously a concern of loss of revenue. There are various ways to recover this perceived lost revenue. Number one, the increased efficiency, which runs through the simplification theme of our brief, will lower the cost of businesses. So that those lower costs will result in either reporting higher profits on which they'll pay taxes, or it will be able to afford various companies to employ more workers who will pay more income taxes. So it'll be backfilled by the taxes from those two areas. It'll be less costly for not only the corporations to administer, but less costly for the provinces to administer, so they'll save money there. Finally, though, we do underline that the federal government will probably have to incent the non-harmonized provinces to adopt HST, just as they did with Quebec and the Atlantic provinces when they went on the harmonization route. But through the careful discussion of that, I think that it's something that will benefit all.
Okay, we've heard from one particular association, a large group, the Canadian Restaurant and Food Services Association, how the impact on them to a harmonized sales tax, and I can't help but agree that it is going to impact them. How do we deal with that? And they're not the only ones, I'm sure, that see some problems with this. How do we deal with those situations? What type of a tax do we put in place, or what type of a tax do we remove, if that's the case, to allow them to compete with the homemade meals in the supermarket?
Oh, from a basic competitive position, if the tax in a particular jurisdiction on a particular good or service is all the same, then and the compliance costs of collecting that tax are quite reduced, competition should naturally take its own course. I mean, I'm not sure the federal government is looking to find specific industries which it would benefit. I think your objective is to benefit all industries equally. So all industries in, say, Ontario or Saskatchewan would benefit equally from the simplification of the sales tax system. Your problem is overcoming the perception that individual provinces will be worse off after harmonization. The only evidence available is, of course, the 3 eastern provinces which harmonized 8 or 10 years ago. And looking at the revenue trend in those 3 provinces, they're certainly collecting more sales tax now than they were before harmonization. So there's all kinds of variables over a period of 6 or 7 years that would go into the consumption tax yield, but I mean, it's quite clear those provinces are collecting more now than before. Helped a lot by the federal government agreeing to a monetary stipend to shoulder the blow.
That's the sort of an incentive that takes long-term planning to make sure that it does benefit the whole country. Have we got a minute left?
Time is gone. We'll now go to Mr. Jacquet. Sorry.
Oui.
My question is for Mr. Heddy, as well as for the witnesses here. Here in Canada, we have the specific reality of being the neighbors of the United States. Now, a few years ago, some people were saying that eliminating the GST would be impossible. Now, in light of the European experience and drawing upon your expertise and the fact that we have recently reached parity with the US dollar, now, would it be possible to export consumption? That is, have more Canadians buy in the U.S., and how can we counter this phenomenon? Perhaps Mr. Hedy can talk to us about the European experience.
Well, the experience in Europe is that there is a certain amount of cross-border shopping when there are countries that have very significantly different rates of tax, but it's usually a very limited phenomenon because the differences in value-added tax rates between neighbouring countries in Europe is usually fairly small, and therefore you would need to be planning to purchase a great deal for it to finance any significant sort of trip. And I think, in fact, the greatest incidence of cross-border shopping is not with respect to differences in value-added tax rates, but differences in excise duty rates on things like alcohol and tobacco. There's a considerable cross-border shopping between, for example, the United Kingdom and France that is driven by the differences in excise duties. But there's the VAT difference would go the other way, but I don't think French people go to England because of the 2% difference in the VAT rate.
Thank you. I agree with Mr. Hedy. I mean, a 2% variance in the consumption tax is not what's going to do it. It's the fact that the Canadian dollar has significantly surged from 67 cents up to par that has made the big difference. And that really underlines the need for improved productivity in this country, which is one of the reasons we're calling to enhance skills training through the tax credit. If you want to get at the flight of people across the border to Buffalo and Plattsburgh, it's not the 2%, it's the 30% differential in the currency, which now really makes it time to start focusing on productivity and competitiveness in Canada.
Mais le fait que maintenant on a la parité avec le dollar américain.
But now that we are at near parity with the US dollar, now perhaps you'll have to elaborate, or I may have misunderstood, but when it comes to our productivity and that of the Americans, well, how would you compare us? How would you rate us relative to the Americans? Before, Canadian businesses were not as efficient. This wasn't so obvious because there was a time when the Canadian dollar was at 67 cents, and now it's close to $1. So it's become much more expensive to do business. As such, Canadian companies have become less competitive beyond our borders. And that's why it's so important to focus a lot on Canadian productivity. Now, during those years when businesses were recording high profits, now I don't want to be judgmental here, but I know that during a period of time, businesses were in a good position and they were able to boost their productivity. Was that based on shareholders' demands? Or was it simply a matter of the market at work and exercising its own forces? I know of many examples of companies that are better focused during difficult times. But when Canadian products don't do as well, well, that's a prime opportunity for businesses to revisit how they operate.
Mr. Conway, in your presentation, you, as have many others, quote the Irish tax experience favorably, and certainly there's a lot to be said. I mean, it's quite a dramatic drop from 24% to 12%, and growth in GDP and the foreign direct investment is pretty astronomical, particularly for a country of that size. And being of Irish descent, I'd like to think that that's all because we're way smarter than everybody else. However, I have a sneaking suspicion that that it may have as much to do with the subsidies from the EU as it has to do with smart tax policy. So I'd be interested in the comments of Mr. Conway, Professor Brooks, and Mr. Heddy on the, if you will, the dramatic growth in the GDP of Ireland, and what's attributable to their tax policy, and what's attributable to the subsidies that the EU gives them.
Well, since I'm also of Irish descent, I like one of your suggestions.
Okay. At that point, we're agreed. Yes.
But I think other European countries receive subsidies as well, and the difference with Ireland is that they did the reduction of corporate taxes, and this drove, in our view, a significantly higher growth than their counterparts. I don't know if...
I was just going to make the comment that a tremendous percentage of EU subsidies to Ireland are in the agricultural field.
Or in the cultural?
Agricultural.
Oh, agricultural.
So if you're talking corporate taxes and comparing them, or increased productivity, economic growth, and economic subsidies or subsidies from the EU, I think you have to be careful that you don't take a broad brush and make the simple statement that there's one cause of some economic response or economic reaction, and on the other hand, you don't mix everything into the pot. Because, as I said, economic activity in Ireland, and I'm sure Mr. Heddy can support this, has clearly increased. Taxes have clearly gone down, but whether the economic increase is totally attributable to EU subsidies or tax rates, you could never say it's one or the other. It always has to be a combination. And
Professor Brooks?
Two real quick comments. One is that I don't think the tax had very much to do with it. There were a whole series of factors that led to that growth of direct investment in Ireland, and among many others, they just got their timing right, because it just happened to be at the time when these large high-tech U.S. firms were looking for a place to locate their firms in order to export in the EU. And there was an English-speaking population, highly educated. Indeed, one of the clever things they did with those EU subsidies is got rid of all tuitions in higher education. So they had this very highly educated, low-wage workforce, all ready for the big high-tech U.S. firms, so they're located in Ireland in order to get in the EU. If it happened at some other time, the effect would have been very different. The second comment is, even if it did work, it only worked for one country. It's a beggar-thy-neighbor policy. What if every European country had reduced their corporate taxes to 12%? What would have been the effect? Zero. There's an enormous collective action problem with respect to corporate taxes, and that's why the most you can advise a country is keep your corporate taxes about in the middle of the pack, and try to negotiate with countries around the world not to try to beggar their neighbor in the way the Ireland did. I mean, why did Germany put up with it? I mean, well, in part they put up with it because Ireland was such a poor country at the time. So that it's just a very unique circumstances that can never be duplicated.
Eddie.
I wouldn't think that it was the EU subsidies, but I would think that it's partly the tax. But the other big thing is, as Professor Brooks said, that it was the fact that Ireland joined the European Union, and thus it was a location in which firms could establish themselves and have access to the whole of the EU market. And that happened at very much the same time, so it's very difficult to disentangle the two.
much. Mr. Del Mastro and I believe Mr. Wallace are going to share a quick segment, and then we'll call this meeting.
Yes, thank you, Mr. Chair. Mr. Hetty, just very quickly, I wanted to go back to one of your graphs, which was top statutory personal income tax rates. So these would be the taxes paid by the highest income earners in the economy. And I note, for example, that Canada is considerably higher than the United States. And I just wanted to, this is always, we talk a lot of politics, obviously, here. Politically extremely unpopular to ever talk about reducing the top marginal tax rate, the top effective tax rate on high-income earners. That being said, we do have 13,000 Canadian-trained medical doctors working in the United States, most left at a time when our dollar was low and our taxes were high. There is a need to be somewhat competitive with jurisdictions, is there not? Is that not kind of a broad-based kind of theory that we should be trying to follow in Canada, if we want to avoid brain drain?
I think it's a difficult, because when people are deciding where they want to live, they're not only thinking about how much tax they get, but also what the cost of living is. And one thing that can happen in countries where people pay somewhat more tax is that they also get somewhat more benefits. So, for example, European countries pay higher taxes, but they all have free medical care. They all have almost free higher education. So you have to look both at the taxes that are paid and also the state services that they receive in exchange. So
right. No, I don't disagree with you. We have those things in Canada as well. Obviously, we have taxpayer-funded health care and we have lower tuition fees on average. But we did lose an awful lot of our best minds to the United States at a period when we had a low dollar and a high tax rate. So it's a real danger. Mr. Gorman, I just wanted to give you a very quick second to
hurry.
Okay, just on East-West trade, I'm really concerned about the patchwork system of regulations and taxes that we've got in Canada. Would that advantage East-West trade in Canada, domestic trade? Harmonized sales tax.
Harmonized sales tax definitely would, because you would eliminate the distortion that was referred to earlier of one province having a higher sales tax than another, hence trade moving one way. What you would do if every province had the exact same sales tax rate, if you could ever get to that point, you would have the most beautiful tax system in the world, because taxes would then be eliminated from the business person's decision.
Thank you.
And that's the key issue.
I appreciate it.
Mr. Wallace.
Very quickly, Professor Brooks, my question to you is that there's, I think, 4 marginal rates and income levels, that thresholds that they apply. Based on your work and your opinion on how things should work, would you change any of that from a tax perspective in terms of the number of marginal rates that we have in the tax system personally and the thresholds at which they apply?
Well, we apply, for example, our top threshold. Indeed, again, Chris would know this, but I think we're a little out of line with the OECD. I've heard people say that our tax threshold is quite low, right. And it is low compared to the Americans, but it's not low compared to the other industrialized countries. And so that, and I'm just, again, with those rates you can play with, I think there's a good case to be made that you should have a relatively high threshold and then just have one rate that goes through most of those income ranges, and then a couple of rates at the top. I would certainly impose an additional rate on, whatever. The number is just arbitrary, but people earning over $250,000, maybe people earning another rate on people earning over $1 million. But I think there's
So you would add rates?
Yeah, I would add a couple of rates at the very top end. Exactly.
Okay, thank you.
There's lots of revenue to be made up there, and our rates
You love revenue. You love taxes, don't you, sir?
And,
you love them.
I like the services that they buy for us.
Yeah, okay, thank you.
Benefit enormously from them.
Thank you very much. And with that, we're going to call this part of the meeting over, and I want to thank the witnesses for coming forward. Particularly you, Mr. Hetty. I understand that you're you're a little bit ahead of us, about 6 hours. So why don't you? So that would make it about 11:30 in Paris. So why don't you did such a great job at committee? Why don't you just take the rest of the day off? That'd be really great. We certainly appreciate you taking the time and being here. And with that, thank you. And I just for the committee's information, we had a steering committee meeting prior to. We will be starting C50 on Wednesday, hearing from the minister. Again, another minister on the following Monday. Mark Carney is going to be in here on the 30th. C50 should take us, I don't want to presume anything, but that it should take us for the foreseeable future on our calendar. So I'll just give you that information for now. So thank you. With that, meeting adjourned.